JC Parets, founder of Eagle Bay Capital. How you doing, JC?
I'm doing great. What's up, guys?
Oh, we're just making fun of the Fed here, and all the shenanigans that went on yesterday. What a surprise! They didn't raise interest rates. JC, did you almost like fall off your chair when it didn't go up a quarter point?
The market got it right, and the economists got it wrong again. I can't believe it. I'm in utter disbelief. I can't believe it. The economists get it wrong again. Shocking.
That
No,
U.S. dollar
it's
sell-off
hilarious.
was JC. That U.S. dollar sell-off was shocking though too, because honestly, did they honestly think they're not going to keep kicking the can down the road? We've been saying this forever. So just because they removed the word patience, like Janet Yellen said, it doesn't mean they're not going to be patient. But I was shocked at how hard that U.S. dollar sold off. I did not think that we could sell off that hard. But then today I come in and we're basically getting back all the losses. What do you think of the U.S. dollar here?
I'm not surprised at all that the dollar's selling off. Last week, anecdotally speaking, I've never seen, so many dollar bulls in my entire life. You guys, yeah, I've never seen it. You guys know I look at all markets, whether it's stocks or S&P 500 or Poland, U.S. dollar, currencies, commodities. To me, it's all math and letters. I really don't care. So when I look at something in the dollar, throughout my career, if I see something interesting, I'll mention it. And nobody ever cares. Nobody ever gives a damn at all what I think about the dollar. Now, as of the last couple of weeks, I get calls from media outlets across the board, and I couldn't get a single phone call or email from anybody, you name it, that didn't have to do with the dollar. So it was nothing I've ever seen before. And then simultaneously, we hit the 161.8% Fibonacci extension of the entire 2009 to 2011 decline in the dollar, and I was pointing that out on StockTwits and Twitter. We hit that objective, and it was also the 261.8% extension of the consolidation of the dollar that we got throughout January and February. So two major levels simultaneously were hit, while sentiment anecdotally was at extremes, and then the data suggested the same exact thing. The hedgers, the smart money, are hedging like if the dollar's going to zero. And, the dumb money, all of the polls and the aggregate data that, we put together also suggest that we're at the most bullish extremes we've ever seen. So, no, I'm actually not surprised at all that the dollar sells off. What I am surprised about is the bounce that we're actually getting this morning.
Huge.
I think that's pretty interesting, but, whatever. Let's cross that. Let's give it more than a few hours of a bounce. I don't know necessarily that was the top in the dollar. I do think it was a top. So at the very least, we should see some consolidation at this point in the dollar, whether it be sideways or whether it be, further downside correction. I still think that we get some digestion of gains here.
Okay, yeah, because it is coming back, so a lot of people stuck, maybe trying to exit before
I
we.
did. I had some. I've sold some U.S. dollars here actually just now against the Canadians. So I'm using the bounce. I watched that go against the Canadian. I watched it fall to 124.20 or something. It's back up here this morning at 127.26. So getting back like three-quarters of the losses from yesterday. So I used the bounce to get out of a little bit of a position.
JC,
There you go.
you mentioned a technical term there, and I just wondered if you could explain it to our traders. The 1.618 Fibonacci extension, and I become more familiar with that term with my buddy Brandon. Could you just explain that real quick? It sounds a lot more complicated than it is.
Yeah, it's actually, very, very simple. So the decline, as you guys know, during 2008, when U.S. equities were just getting, destroyed and, risk off in general throughout 2008. Money was flowing into the safe haven of the U.S. dollar, and the U.S. dollar absolutely exploded throughout '08 and peaked simultaneously in March of 2009 when the S&P 500 bottomed. There was a very, very strong negative correlation at the time between the dollar and U.S. stocks. So as the dollar peaked, the S&P 500 bottomed March '09. So as the market rallied, the dollar got slaughtered and really put in its ultimate low in 2011 in the spring. So if you take that entire decline from the peak in March '09 to the bottom in the spring of 2011, right, that entire move, if you multiply that decline and you take the 161.8% extension of that entire decline, it takes you to $100.50. Actually, technically $100.58. which is the 161.8% extension. Then you can also take it to the 261 extension, which is what we did in the during the correction of the January through February correction, the one for the last couple of months, and then we broke out in the beginning of March, right? That little digestion, that little flag pattern, call it what you want, but that little consolidation, if we take the 261.8% extension of that, it takes us to $100.59. So, there's for me, it's when these Fibonacci extensions cluster together on multiple time frames that these levels really stand out to me. And I was pointing it out on the stream. I wrote about it on Yahoo Finance. Some people cared, some people didn't. I take these levels very seriously. As you can see, so does the market. The fact that Janet Yellen came out and did her dog and pony show yesterday, may have been the catalyst to do that. But if you look, it had already peaked the prior week.
Couple tickers from the chat here, just moving on to the equities. Got SF Bright. He wants your technical thoughts here, JC, on two stocks, GoPro, and he wants your technical thoughts on Baidu, which is one we haven't talked about for a while, BIDU. It had a nice rally there yesterday. Maybe we should start with the Baidu because it did rally up almost $8 there yesterday, and it's trading just flat here today. But what are your technical thoughts here on Baidu?
Yeah, you want to know something? The stock's trading below an upward sloping 200-day moving average, which you don't see very often. I like that. You've got a pretty clean downtrend from the fourth quarter last year. We definitely want to see that downtrend resolve itself to the upside. But based on the way momentum looks, I like to look at a 14-day relative strength index, the RSI. I love how during this correction over the last 3-4 months, it never got into oversold conditions. So I love seeing that. Prices did very well yesterday below an upward sloping 200-day. It's tough not to like. Bigger picture, monster uptrend. This thing looks great. I would want to own this on I think we go higher for sure. I'd love to see a breakout above the 200-day. I'd love to see a breakout above the highs from early March. But this one looks good. I got to tell you. You can go to the weekly chart and look bigger picture at the larger time frame, and we've actually been struggling with the 161.8% Fibonacci extension from this entire correction over the last several years, from the peak in 2011 down to the lows in 2013. Take that 161 extension. We've been fighting with it. That's where we peaked. So these numbers are constantly coming into play, as you can see.
And what about GoPro here? This stock has really been consolidating last 3 or 4 days around this $40 level here. Seems to be almost like a magnet. What are your thoughts here technically on GoPro?
Yeah, I was actually looking at this yesterday. It's actually very, very interesting. You look at the support from August last year. That's where we found support a couple of weeks back. That's a very interesting level. Call it 37.5, something like that. That's a big, big level. And then there's a lot of trend lines that converge here. So, for example, you could take, the highs at the beginning of the year, draw a downtrend line, connecting all of the peaks throughout February and March, and, we're just below that level. It's almost like a falling wedge. Take the, that low from September the 16th, take it down and connect that to the low of January the 16th. And again, that converges here as well. And it looks like we're at the apex of this giant wedge at support from the lows from August. Man, I think we break out. Sentiment is really, really bad right now. Anecdotally, just seeing what everybody's saying. Everybody thinks it's going lower. I love that. I'd like to see a breakout. Look from the highs on January the 5th. Take a downtrend line all the way connecting those peaks. We break out above that downtrend line, I think we could be off to the races. The short interest is the highest it's ever been, obviously. Not that it's been trading that long, but I was looking at the short ratio yesterday. It was pretty intense, relative to what it's been. So, we can get a squeeze. I like it. I'd be a buyer of that breakout.
Okay, let's go to your social media outlook. You were bullish last week. I remember talking about it. The first look at the SOCL, the ETF, that is a nice day. Yeah, that actually gapped up yesterday and kept on going. So sticking with your long on that one. And then let's touch on a few of the individual issues. Facebook, flirt now over $80, and we'll talk about Twitter. But first, your thought on the overall index.
Yeah, man, what a move the last few days this week. It's great, and more importantly, when you talk about breakouts, when you get breakaway gaps, to me, that's a lot of buying pressure. It's hard not to view that as very positive. So if you have a very clean downtrend line from the highs last March, and yesterday we gapped and broke out above that on a breakaway gap. I mean, that's great. And obviously, I'm talking in my book, and I've liked social media, but even if I didn't, it's hard not to love that action. A breakaway gap, not only above the downtrend line, but above an upward sloping 200-day moving average. I mean, man, that thing looks great. Yeah, I definitely think it goes higher. Obviously, not only has nothing changed, but now it actually even looks even better. I liked it before it did this, so obviously now I like it even more. But let me bring up an interesting one for you guys. One of the top holdings is Tencent Holdings, which is the Chinese internet stocks. So the ticker symbol is TCEHY. Tencent Holdings.
Yeah, tell us about this one.
So this is one of the top holdings in the Global X Social Media Index. There's an ETF for that, the one that we were just talking about, SOCL. But if you look at the actual index that ETF mirrors, this is actually the second biggest holding. And just look at that clean resistance going back to last summer, right around 71.5, 71.70. See that?
What's the symbol on that one again,
I,
Ace? Or JC?
I just threw it in the chat there, Joel. TCEHY.
Oh, does that one come up? TC?
I don't know if we got it or not.
Okay.
You should. There's no reason. I mean, it trades here in the United States. It's a huge company, $170 billion market cap,
you're right.
something like that.
There it is.
Company.
That's a nice looking chart there. Okay, go ahead. Sorry about that.
I want to be buying that breakout. I like social media as a group, obviously, and this is one of the top holdings. I think it's only a matter of time before this thing breaks out. We clear all this overhead resistance, which I think happens soon. We want to be aggressive buyers of that. I think it can go a lot higher. You want to talk about Facebook? I mean, man, Facebook's got to be the biggest beast of them all. Look at this consolidation over the last couple of quarters. This thing's a beast. I think it goes to 100. I think it goes a lot higher. This thing's a monster. We want to be buying breakouts, above this as well. We got clean overhead supply. Going back a couple quarters, we want to be aggressive buyers of that for sure.
Okay.
Talking about, just quickly, just before we leave the sector, Twitter thoughts here too, because we've had 3-4 days of consolidation here in Twitter too. Do you think Twitter follows Facebook's lead? If you think Facebook's going 100, do you think Twitter's going higher too?
I think they're two different animals completely. I don't think you can really compare one to the other. I think Facebook is consolidating. It's a monster uptrend, consolidating gains, at highs, right? Twitter is not that beast. Twitter is, has been in a downtrend, really over the past year. So the way we look at Twitter is, I guess, similar to the way we look at social media as a group. We want to see the breakout above the highs from December of 2013, the downtrend line from those highs. So we're not there yet. I think that I absolutely am very confident that we do get that breakout. We haven't gotten it, but I would absolutely be a very aggressive buyer of a breakout above that downtrend line from the highs, from the peak, from the all-time highs. Very clean downtrend line.
Okay, JC, let's go rapid fire here and some stocks they're moving. Also, some stocks in the chat. Real quickly, Apple, nice move here, right back at the highs. What's your quick thoughts on Apple?
I mean, nothing's changed. At the beginning of February, into January, I told you guys we wanted to buy a breakout above the November highs. We got that breakout. The target was 129. We hit it, and there's been no reason to be in it this entire time. It's been a hot mess. The reason that you guys asked me, JC, when you hit your target, what do? Raise stops, sell it? Yeah, you get out. And this is a great example as to why we get out. And guess what? You were talking about, you wanted me to explain Fibonacci extensions. This 129.25, the reason that was our target, it is the exact 161.8% Fibonacci extension from the November highs down to the January lows. That correction that we had from November to January, the extension was 129. And look at a weekly chart. We hit that extension to the penny and had gone nowhere over the last 6 weeks. So, a lot of times when it comes to stocks and portfolios, it's not just price risk and money at risk. Obviously, that's the most important thing. But there's also opportunity cost out there that's also a risk. And, if you've been in this thing over the last 2 months, you've made zero money. So, there's opportunity cost in that's in there as well. And I think that opportunity cost is a risk that needs to be factored in your risk analysis. And I think this is a beautiful example. We hit our target and we've gone nowhere for 2 months. I mean, you want to talk about, maybe not 2 months, but we've gone nowhere for a month. Sorry. But still,
Google?
Opportunity cost.
How about Google?
I want to see a little bit more time. I want to see it holding above 129 and a quarter. We haven't been able to do that. So, I still think you can be patient. And if you miss, and if it takes off and it goes to the moon tomorrow, then whatever, you missed it. Whatever. The risk reward just isn't there.
Google.
At least for me,
Goog.
anyway.
How about Google here? Any thoughts on this? Looks like we're forming some support here. Hit that 575 level, backed off. Now you have 1, 2, 3, 4 lows in a pretty tight range. Any thoughts on Google?
Yeah, I like this one, man. I like the internet space as a group. Obviously, you guys know. Google's a very big component of the Internet Index. Look at the Dow Jones Internet Index. Google's one of the top components, obviously. But also, there's an ETF for that, FDN, Frank, David, Nancy, which is, a name that I've been pounding the table on, for months and, continues to make all-time highs. This thing's a beast. Look at a weekly chart of Google. I always emphasize multiple time frames. Start with a weekly chart and look how Google, since it peaked a little over a year ago, how it's been consolidating those monster gains from from the previous few years. It's a nice little flag, right? You got those parallel trend lines. I mean, man, that's beautiful. I think we ultimately get a breakout, and I think that we head a lot higher in Google. I really, really do. Especially if we start taking out the highs from last month. If we start taking out the highs from last month, man, I think we're going a lot higher, and I think that happens soon. I really like this name.
Okay, and how about Tesla? I don't know if we've talked that one with you at all. The fundamentals there, kind of sketchy. Nice boost from Elon Musk in the Twitter sphere here. Is Tesla something that you mess with? Sure looked like it was going to break down, test that 185, and then Elon came out with the tweets. Now we're back over 200. What's your thoughts on Tesla?
It's a mess. There's no reason to be in this thing. You got a lot of people losing a lot of money, in this, really over the last couple of quarters. There's no reason to be in this at all. Nice little false breakout, caught a lot of people in August, September. Love to see that. Look back at that little consolidation at the beginning of September, above former resistance, from earlier last year. And when you see those little patterns, and that's, by definition, a bullish continuation pattern. And when bullish patterns resolve themselves in a negative way, in a bearish way, which obviously it did, notice how it broke down from that in mid-September as opposed to breaking out like it should have. When that happens, the market is speaking, and there are larger forces at work, and then we saw the result of that. And if you didn't get out, when you broke down, instead of breaking out in early September, you, quite frankly, deserved to lose money this entire time. There was no reason to be in this name, and there's still no reason to be in this name. You have a flat 200-day moving average. There's no trend here. If anything, it's a downtrend short term. I don't see anything. I don't see any reason to be in here. I think you got to give it some time. Let it get back above that 200-day, above 230, get the 200-day going. For me, fine, maybe that was the bottom over the last couple of weeks, but in terms of, getting back to opportunity costs, there's better places to be, man. Do you really want to be in this mess?
Great point.
Like, the CEO's cool and everything, and he tweets and whatever, but is that reason to be in it,
No. Great points here by J.C. Parets. He's the founder of Eagle Bay Capital. He's a money manager, chartered market technician, and a technical analysis practitioner extraordinaire. Thank you, JC. Great having you on as always. You didn't pick on us too much today, so you got to get back at us next week.
No, I gave you guys a break this time.
All right, JC. Thank you very much.
Go get them, guys. We'll talk next week.
All right.
Thanks, JC.